Greetings, my fellow financial ninjas. Today, I'm going to talk about a very important topic, which is how to build your credit history when you are new to the country. Your credit history is simply a score based off of your social security number that tells a lender or a creditor how your credit is. So if you wanted to rent an apartment or buy a car or get a credit card, your credit history is becomes really crucial. And so having a good credit history becomes very important for your survival. And so if you're new to the country and if you don't have any credit history, how do you build it? And it's sort of a chicken and egg situation, because if you don't have any credit history, you don't get any credit, and vice versa. So today I'm going to talk about some of the techniques that will help you to build the credit. Now, my assumption is that you are here in the country legally through some sort of a work visa, such as an L1 or a H1B, or as a student, and so you are eligible to get a social security. Now, how to get a social security is a completely different topic. I might discuss that in a different video. But getting a social security, if you are here on a legally on the right visa, it's as simple as going to the social security office and getting a social security number. Now, when you're starting new, your credit is pretty much neutral, which means that it's not there's nothing bad in it, but then you don't have anything good also in the credit, which tells the creditor that, hey, this particular borrower is worthy of giving the credit to. So let me start with some of the techniques that you can use in order to build your credit history as fast as possible. The number one technique in order to build your credit history is to get a secured credit card. Now, what is a secured credit card? A secured credit card is very similar to a regular credit card, wherein it tracks your spending and how much you are going to, and how much payment you are making every month, and if you are making those payments on time. However, the initial limit that you get for your secured credit card is limited to whatever you put up front. So let's say you go to a bank or a credit union and tell them you want to apply for a secured credit card. They may say, okay, you put $1,000 as a deposit up front, and then they give you the secured credit card, and then you use that secured credit card as if you're using a regular credit card with a limit of $1,000. And once you use that for a few months, you will have sufficient credit history built up where you can go for a regular credit card. Initially you might start off with a small limit, but once you make regular payments and on time payments, it should not take that long for you to build your credit history. So that is, I think, in my opinion, is probably the fastest and the easiest way to build your credit history. The number two strategy in order to build your credit history is to add yourself as a authorized user on an existing credit card. So what I mean by that is, if you have a spouse or a family member, like a brother or a sister or a cousin, friend, whoever, that trusts you, and you can add yourself as a user on that particular credit card, then their credit history gets attached to yours, and then when you're applying, when you use it for a few months, you can then apply for a credit. And essentially what happens is their credit history gets utilized for you to determine whether you are eligible for that credit. The drawback with that is that obviously the person that you're signing up with should also have good credit history, and if they mess up their credit, it will affect you also, and you'll have really bad credit history on your profile. So that is something that is a big no-no. I mean, I would rather have a no credit than having bad credit. The next strategy is to find a cosigner for your purchase. So you can either apply for a credit card and have somebody co-sign with you, or if you're buying a car, for example, then have somebody co-sign for you, and that will help you to build credit. What usually happens is the person that is actually going to co-sign is going to be responsible. So if you make a mistake and you don't make the payments on time, their credit history will be affected. So you really have to find someone who is close to you and trusts you, and is able and has a good credit history and is able to add you as a co-signer. And it is obviously your duty to make sure that you make the payments on time. Otherwise, it will affect their credit history, and then in turn, it might affect your relationship with them if you mess up on your payments. The third strategy is to add yourself as an account owner with another person. So let's say you have a friend or a family member or somebody who's buying a car, and what they can do is they can add you as a co-buyer. And what will end up happening is they will be responsible for the payment. It's their car and everything. You're just using their profile in order to build your credit history. In this case, it is much less riskier compared to the earlier scenario where they were co-signing for you, because in this case it's their car and they're going to make the payment. So that is another strategy on how you can build your credit history. The next strategy that I'm talking about is the credit builder strategy. This is not used as often by people, but what it entails is that you get some kind of a loan, typically with a credit union, because those are the ones that I've seen do these kind of deals where they'll give you a certain amount of as a loan, and it will be kind of like a deposit, and every month you will have some kind of a payment, and this gets reported to the credit agencies, and that way you can build your credit. This is kind of similar to what you would do with a secured credit card. And so in terms of the strategy, I like the secured credit card better because there's a lot more options and there is a lot more companies or banks that are willing to do it. Then the next strategy is, if you are a student, then you can get a student credit card. The companies are much more liberal or relaxed when it comes to students. In fact, that was one of the ways I got my first credit card, because I was a student here. I came here as a student at a large university, and there's the credit card companies. They come to the campus, and then you can apply, and their criteria are much lower, and they are much more willing to work with you, even if you don't have any credit history. So applying for a credit card as a student is also one of a very effective strategies where you can build your credit. Again, over here, your credit limit is probably going to be very quite low because you are a student, and you probably don't have as much income and so on and so forth. But it will still help you build that credit, and once you get a job and everything, you can always ask them to increase the limit. But the important thing is to make sure that you are making your payments on time. The last strategy that I'm going to talk about is using your bills as your payment. So let's say you're paying rent, then there are different companies such as Rent Track that can help you to report those payments that you make to your landlord to the credit agency. Because a lot of landlords do not report your monthly payments that you make towards your rent, which is a significant amount, and you can use one of these companies to actually report that and help you build your credit. Now, once you've established your credit and you have a decent credit history, it's very, very important that you maintain your credit history. And one of the ways to do that is, you track your credit history. There are many free solutions such as Credit Karma, which is what I use, that helps you to track your credit history. And they give you notifications, and they give you regular updates on your scores and so on and so forth, so that you can keep a track of how your credit is doing. Avoid applying for multiple credits at the same time, because that really affects your credit score and brings it down. So do not apply for brand new credit unless you really have to. So that's another way you can keep your score high. One another thing that you should always be careful of is closing down some of the existing lines of credits or credit cards. So if you have a credit card that is pretty old, you might not be using it, but it's a good idea to keep it, because if you end up canceling it, the score is actually determined also by the age of how long you've had a certain account for. And if you have a credit card that's been you had it for a while, 2, 3, 5 years or so, don't cancel that, because if you cancel that, your credit history, the length of your credit history for an account kind of reduces, and that affects your credit score. Always try to keep your credit card balances low. In fact, what I would say is just pay them off every month. I am not a big fan of having a credit card balance ever. There's no situation where you should ever have a credit card balance on your credit card. The interest rate that gets charged is ridiculous, and I think overall, if it's a financially, it's a very very bad decision to have some kind of a credit uh, balance on your credit card. So make sure you pay it off every month, and also try to minimize the utilization of your credit. So let's say you have three different credit cards that have a balance of 15,000. It doesn't mean that you have to use the entire balance of 15,000, right? Try to use minimal, so that the ratio between what you're utilizing and what credit is available for you, the lower the balance, the better it is for your credit score. Try to have a good mix of different types of accounts. It could be credit card or a mortgage, car payment. One of the things about car payment, though, I really also, again, I'm not a big fan of car payments. If you're initially, it's your first car, and you don't have the money to buy it outright, I can understand, borrowing the money for that. But typically, what I always would suggest is to pay cash for your car purchase. Do not have any type of loan, uh, except for maybe a mortgage. The mortgage is the only one that I think it is okay to have. But again, having different types of credit types makes actually a difference, and increases your, or at least helps you to maintain your credit score. Um, so those are some of the strategies regarding the credit. If you like this video, please click on the like button and do subscribe to my channel. I will see you in the next video. Bye.